Soybeans making some gains for a fourth straight session, and hogs also seeing some improvement. AgDay's Michelle Rook has this analysis in Markets Now.
A mostly higher day on Tuesday, with the exception of some of the wheat contracts. Dave Chatterton with Strategic Farm Marketing is back with us. And Dave, let's talk about the soybeans fourth day up. Was that basically more corrective buying, or where did the push from the meal market come from?
Yeah, Michelle, nice to see a good close yesterday and adding on a good close here today. Taking out last week's high and those March soybeans at that 1237 level, closing above that. That's the first kind of cog in the process of forming a bottom here and maybe trying to talk about turning the market the other way. I think the meal just doing a little catch up from what happened yesterday. Had a very active meal oil, day yesterday, particularly with the announcement of the Phillips 66 plant, kind of your environmental approval out in Rodeo, California. It's a big plant. It means a lot to the oil market, to beans in general. So meal doing some catching up today, but I think there's another story here, Michelle. I think it goes back to South America. We continue to see these Brazilian soybean estimates creep lower. We're well below 150 in a lot of analyst eyes right now. I don't know that our shop is particularly that low, but there are estimates out there as low as 135, and that starts to change the complex of what their exports could look like. And now we've got some dryness starting to develop in Argentina.
Corn getting 3/4 of a cent higher for the day on Tuesday, but we're kind of in a consolidation pattern right now, aren't we?
Yeah, kind of the little train that could, trying to get up that hill, not quite able to do it just yet. And I think it's a situation where we haven't had much luck trading below 440. We haven't had much luck trading above 446 or 450. And we've got a downward sloping channel in the chart going all the way back to last fall. I think, that comes in at about that 455 to 60 level, depending on how you measure it. That's providing a little bit of resistance here, but the balance sheet room that we've got in the corn, I think, is the difference here.
And a pretty strong day in livestock. Was that fun buying or just the strong product values?
Yeah, I think it's both. I think these fund positions have been pared down to a pretty minimal level on the cattle complex, basically a neutral position in the hog complex. We're seeing the cash markets and the cutout markets perform. We're seeing the packer margins move into the positive territory in terms of beef and improve in the pork complex. And surprising to see that demand and with this winter storm passing, weights, kind of thought to be back on the way up, with slaughter thought to be picking up here again, clearing all those turtles in the supply side.
Thanks for joining us, Dave Chatterton with Strategic Farm Marketing. We'll have more AgDay coming up.